So in this video, I'm going to show you how to structure credit spreads inside the Interactive Brokers mobile app. We're going to go through put credit spreads and call credit spreads, get you guys up to speed on both. Let's start with put credit spreads right now, which have the kind of bias that the stock is going to go upwards, and they are a bullish move. And you use credit spreads again just to kind of cap your downside loss with some risk protection and also cap your gains, but hopefully lock in a trade that works better in your favor. We're going to focus in on coin for this one, for Coinbase, and going into their stock right there. Let's get into it. We'll click there, click in there again, just on the chart to get into the stock. And now what we want to do once we're loaded in here is just go into the chart really quickly by clicking on the chart. And at a really high level here, technically on the chart, there's been a long downtrend for crypto and Coinbase as a whole. There's been a rejection candle right there, a rejection candle right here more recently after some high selling pressure, kind of giving me the idea and inclination that it might be ready to rebound here. There's some growing volume down here as well. So let's say for this hypothesis, this is going to go upwards like this. And we're going to put our lower end here right at this end of this candlestick, which is the low point of 114. Let's call that 110 will be the kind of target area for the low end, or the high end rather, of our put credit spread. Let's hop back into the options chain now, looking at the 110 level. Go to options, pull this guy up. Now we want to make sure that we go out in time enough, and we want to kind of make sure we understand the volatility that's going on in the stock as well. We can see volatility here for this week is 65. We probably don't want to do this week. There's not enough juice to get paid at the 110 level. If we go all the way down, you can see that if this contract goes in, it's very, very little juice that we're going to be able to squeeze out of this. So we want to go a little bit further in time. The sweet spot when you're looking at options in general, when you're looking to sell them and kind of capitalize on theta decay or time decay, is about 30 to 45 days, just as an FYI. That's when theta decay moves at like almost its peak, and it gets more aggressive as you get closer down in time. So let's go out to March 15th and let's see what that looks like. There's some increased volatility, which is good. As you go in time, that should go up. And then if we go to our 110 level right there in the middle, we can see that 110 level is 630 and 665. So we're going to call that, probably somewhere around 650, right? That makes sense math-wise. Let's call it 650 for that one. And then we would then look to also complete our bull put spread by selling this option right there and buying one at a $5 or a $10 or whatever increment lower you want to go. Just realizing that the bigger the spread that you have, if you go 110 and 105, you have a spread that's $500. So really your max loss is capped in this scenario at 500 minus whatever you get paid to do this credit spread, the difference between these two numbers right here. So in that scenario, your loss is going to be roughly 500 minus, it's looking like 650 and 475. That's about 180 bucks. So we're going to be looking at a max loss in this scenario of roughly 320 bucks if the stock price decides to flatline and tank all the way down here. But to set this up, technically, we would pick our two strike prices right there. We would sell the first one, and you would sell this 110, right? That's the one that you're going to get paid for. And you want to make sure when you're doing a credit spread, that this number here, they're bigger than these numbers here, right? If it's not, it's going to be a debit spread. You're going to have to pay to do this. When you're doing a credit spread, a credit put spread, in this case a CPS, this number here has to be bigger. So you have to sell this one first, and then you would click on to buy the next one as well. And that would complete your put credit spread. And you can see there down at the bottom, the order is roughly right there. We've got to target the mid price around 160-ish. Again, and this is be a little bit more tighter when the market is open. This is just for kind of the how-to, the exercise of this video is to go through the motion of how to do it. Paper trade it first, as always. You can see that I'm doing right here down at the bottom to get it right. You go into order there at the bottom. If you wanted to bump up the quantity right there, you could do so. If you want to do 1 or 2 contracts, you could bump that up. You could also do a limit or a kind of market or whatever kind of order you'd like to do. Usually it's either market or limit when you're actually starting them to get a position in the hopper and get it on. So I'm going to keep it at limit. Then where your limit price goes in, that would be that same price that you just saw on the previous screen. It would normally fill with an ask, mid, and bid here when the market's open. We had that on the last screen. This was like 160-ish. So we're going to put that in right there for this as well, for this example. I usually just pick the mid right there because it's easy and it's quick, and it usually gets filled the fastest for me, unless the stock is really moving in a different direction. And so we'll do that. We'll just type in right here, negative Actually, we can't do it that way. We got to go through the wheel and wheel up a bit or wheel down to get negatives. And then you want to go and then just update it. This is the easiest way to do it when the market's closed. As an example, is 160, because you want to make sure that it has a note for a credit right there. If I was to just type in manually right off the hop and go 160, I'll show you what it does. You just do 160 or 1.60, and it's going to update to a debit, which means you're going to be paying for, which is not what you want to do. You're going to be way crazy off on the price. I'm going to make sure that says credit in there because we're doing a credit spread. So again, I'm just going to go to the wheel here and just wheel down all the way. Could do this faster by just typing in the number, but I'm just going to go down again to 160, and then there's our credit right there. Time in force day is good, and then submit to buy at the bottom, and that gives you a bull put or a put credit spread in the hopper. We're going to go ahead now and go to a call credit spread and do it the opposite way, where we think that the stock price is going to go this way. You do a call credit spread and you set up similar way, but you get paid again as time goes by. If the stock price goes down, you get paid really quickly. Let's see how it looks. Backing out of here, backing out of here. We want to do this on a stock that has been overvalued a little bit. We're going to go look at this and do it on Lulu, who's been on a bit of a run and now it's kind of slowly pulled back here. So again, jumping in the chart really quickly, high level. Here's what I'm seeing. Here's what I'm looking for. You're looking for a stock that has been on a heater, which Lulu has. It's kind of topped out already. Up here, you see that strong reduction candle right there. There's a strong move downward. It kind of pulled back and sustained, moved downward even further. And now we've got an indecision point where the buyers and sellers are saying, we want to go lower. No, the sellers say we can't get there. The buyers come in and push it back up higher. Now the price wants to go higher. The sellers say, no, we don't want to go there. The overall trend is downward, and we're going to continue that hopefully with this call put spread. So what we're going to do is bet this is going to keep on going downward. Even if it stays kind of where it's at currently, we can still make money if it stays there at 457 based on theta decay. But if it does move downward, make money a little bit quicker. So what we're going to do is set that kind of price range at the top of this candlestick just really quickly here, which is going to be, if I just click and hold there, you can see it pop up on your screen there in the legend. That high there is 463. Maybe we'll go 460-ish or 465. Those will be our targets, 465, to see what that's cooking like for our kind of top end. And then we'll go above that again when we actually go ahead and buy a call option as well, maybe the 470, 475 range. We'll see what it looks like in the options chain. So we're gonna go back from here. We're gonna click on options, right? Same way we did before, going in the same place. And instead of going on the put side this time, we're going on the call side. That's the only thing that's going to change. And we're going to go at that same kind of time frame out in time. We're going to get out to the third week of March, 36 days away on the top. IV's not crazy high right now. IV last is, yeah, it's not crazy. The IV total right now is very low for this stock right there. You can see in the IV rank, it's pretty low over the past year, which is fine. Sometimes you get paid high for IV, sometimes you don't. And we said up here 465 was kind of our sweet spot. We don't have an option for 465 down here on the call side. So we can go 460, which is right at the money, which I don't want to do. It's kind of too close for me in this example. If I move over to my delta, I like to target deltas even sometimes as high as 3.5 or 3.5 in here. So maybe we'll go to the 480 level and kind of get out there and just give ourselves a bit of room because the stock can move a little bit and it's a higher priced stock. Go 470 if you want to get a little bit more aggressive. Just depends on how bullish or how bearish you are on the stock price. Obviously, if you go 470, there's a higher potential of getting more profit out of the trade. If you go 480, you have a little bit less risk on the trade in terms of your first call option that you're going to sell. It's basically, it's a personal preference, it's technical analysis, a couple things that kind of come into it. And it's just where do you think the stock is going to go is how you risk on, risk off. It also comes down to what your other positions are in your account. If you have multiple positions like in this kind of high risk leverage area, maybe you want to go out one or two kind of deviations back downward and take a little bit more risk off. So let's go 480 here as our little ballpark area. And we're going to go and sell this call right there, start it. So we could sell that. And then we also have to buy the other downside protection on that. So we got to go 490 and do that way. And again, you'd see this credit coming down here. As long as it says credit, you know you're doing a call credit spread, CCS, or a bear call spread, BCS. Okay, those are the two kind of acronyms that would go with it. But you're getting a credit, you're doing a credit spread, you want to get paid. That's what we're looking at here. The payment right there would be the difference between the midpoint here of 670 and 695 and the midpoint here of 435 and 455. So again, we're talking about 680 roughly minus 445. Somewhere around there, you're going to get the number of 235. And then you have commissions, you have a little bit kind of a margins in between there between the two numbers, and you're going to get this mid price here of 229 for your overall kind of profit on the trade, potential profit. So $229 to sell this credit spread. And again, if this stock moves down, you make money. If it stays the same, you make money. If it kind of flirts with this 480, 490, you may have to kind of make a decision on how to exercise or change out the options. I'm not going to go into what has to happen that today. This is just to show you the execution. I will do a follow-up video telling you exactly and explaining what happens if the stock price ends up here, if it ends up in between these two, which is not what you want to have at all, and if it ends up way up here in this kind of 500, 510 range. Same thing for the credit spreads, for the put spread. I'll do a follow-up video on this, assuming you guys want that kind of content of what happens when you get to every single level when the stock price moves and kind of goes in these different kind of marks. But to get this in the hopper again, you would just go there to order. Remember our order there of 229 for the next screen. If it's market open time, it's going to automatically populate for you with the mid price, but we want to get in here. One is good, limit's good. We're going to get in here and get it right here, go there. Just make it negative and then fill in the number yourself. We said 229. 229. Again, it's going to go in. You can have the mid when the market's open. You just click on the mid. It's going to populate it for you right there automatically. Calculate it. We go day, we go show all. That's fine. We can go into submit to buy, and that is how we get those trades in the hopper for your credit spreads. We're looking at call credit spreads. We're looking at put credit spreads, how to put them in, interactive brokers, mobile app. Hope you got some value of this one here today. If you did, leave a comment what you want to know more about in terms of the IBKR mobile app. I'd be happy to put on a video and kind of go over a couple things for the app for you here on YouTube. Thanks so much for watching. I'll see you on the next one.